What's going on, guys? Mike here, and welcome back to another portfolio update. Now, for the new viewers, this is just a quick recap, but this is where we're going to dive into my LIRA, my RRSP, and my TFSA accounts. And if you're familiar with the channel, you probably saw this community post sometime in the month of February where I had sold half of my position of PSA.TO and I deployed it into more equities within my portfolio. Now, I did add one ETF, and that's what we're going to look at right now, and that is TD Global Technology Leaders Index ETF, better known as TEC.TO. Now, this isn't like a core holding of mine or anything like that. This is more or less an addition to my core, which is obviously XEQT. Now, I will be making a dedicated video on the kind of the more of the rationale behind adding TEC.TO. And if you don't want to miss that future content, definitely hit that subscribe button so you don't miss out on that. But I just want to quickly recap on what TEC.TO is. It is an international ETF, such as why it says global in it, but it does primarily hold U.S. companies because the best tech companies typically are within the United States. So you'll see here, there's Microsoft, Apple, Nvidia, Amazon, Meta, Google. Even if you scroll down even further, I know lots of people are interested in AMD. This is also in TEC.TO. So again, like I said, I will be making a dedicated video on the rationale behind TEC.TO, so if you want to see that, definitely subscribe and check that out when it comes. Now, to get into the portfolio, you're going to see right away the portfolio has now exceeded 66,000, and if you remember the last portfolio update, we were at 63,000. So I am definitely pumped about this. It's a great month's worth of earnings, contributed probably because of the annual reports that had come out. So we survived the annual reports, guys. This is good news. So we're going to go through the construction of each account now. So starting with the LIRA account, this guy does have $23,000 in it, and it does hold $15 worth of cash. I am not normally a cash person. I pretty much like to deploy everything I get as soon as I get it. So this is though my kind of my set and forget, right? So you'll notice here I have 90% at XEQT and I have 10% bonds, which is in a bond ETF called ZAG. Now, kind of boring, but this is in Quest Trade, and I barely go into it. The only time I do is when I get enough dividends to kind of redeploy more to these ETFs. So again, this is the set and forget, and we will be looking at the performances here after we go through the other two accounts. Moving over to the TFSA, this guy has $11,104 and $50 cash. Now, for those new viewers, this is where this is the account where I have biweekly contributions, which I currently contribute $210 biweekly. So this account I do kind of play around with every so often, which obviously you could classify it as more actively managed versus my LIRA, which is more passive, set and forget. So just looking at the targets here, I do have Enbridge, which is a really personal favorite of mine. I do have a target of 5%. Now, leading up to its earnings, I did kind of over contribute this last month. So you'll notice how it is at 5.6%. And then I have two real estate REITs. Now, the biggest change in the portfolio that you'll notice this month is that they used to have a target weight of 5%, and I have reduced it down to 2.5. Now, my rationale behind that is I did kind of start buying into the real estate sector when the interest rates started kind of going on the increase. So I kind of bought it all the way on the way down. So my hopeful goal is now, as I'm just going to kind of maintain these positions, and I am hoping that once interest rates do start to go on the decline, that the real estate REITs will kind of pop up again. Now, I don't necessarily have intentions of selling both of these in the near future, or say a year or two from now, but there is a consideration for one. So I will let you guys know what that might be later on down the road if I decide to do that. But right now I am maintaining them at a 2.5% target. Then of course, TELUS being a target of 5%. TD, Canada Trust, being again a target of 5%. And this is why I had to reduce down my real estate exposure from 5 on the each individual from 5 down to 2.5 because I needed to make room for 5% to have TEC.TO fit into the portfolio. And then of course, like always, my core ETF being XEQT. So that is the construction of the TFSA. This one has the most activity because of course I do contribute to it bi-weekly, right? So now going into the RSP, this guy does have $31,000 in it with $34 of cash. And the construction is ever so slightly different compared to my TFSA. Now, of course, you're going to see PSA.TO, which has a target of 0%, which currently still has 6.4% within the portfolio. And I do plan potentially today or tomorrow. I haven't made my mind up yet. So tomorrow marks the interest rate announcement for the Bank of Canada. And of course, everything always seems to pull back ever so slightly when that announcement is coming. So I'm trying to play or time the market, which I don't ever recommend, but do I sell it now and then deploy the rest into the portfolio, or do I wait until after the interest rates? If they increase, everything's going to drop, but I don't think that's going to happen. I think it's going to be kind of just as status quo. So I'm going to think that probably things are going to bounce back, once the markets see that nothing has really changed. But anyways, that's something for me to decide, and I will keep you guys posted on what I do. And of course, you'll see here another real estate REIT of mine, which is RioCan. This used to be, again, at 5%, and now it is at 3%. Again, I needed to make room for TEC.TO, and TEC.TO coming in at 5% of my RSP portfolio. VDY also used to be at 15%, and I've reduced it down to 10%. And so with this guy, I did also kind of buy this on the way down when interest rates were on the incline. So of course, financials and everything kind of took a hit. So I still want to keep a 10% weighting within VDY, but I am expecting once interest rates come down and everything kind of normalizes, that VDY will kind of restore back to where it was. So we'll have to wait and see. But again, it's all, massaging, playing around with the markets. Typically, that doesn't work out in the best, but I have this itch I need to play. So, and then of course my XEQT holding coming in at 72% of the RSP, and a little bit of a bond weighting of ZAG at 10%. So that is the three portfolios that we have here. Before moving any further, I do want to make a quick announcement on the channel. So over the course of about 4 or so weeks, I've been getting a pile of private messages, on like Reddit, or just a lot of questions being asked in the comments on the videos, which is awesome. But I do want to announce that I've officially created a Patreon page where I will be offering my services for a very low fee of $5 a month, where I will be able to provide you guys one-on-one coaching, whether that's, how do you get started with DIY investing, what ETFs to buy, how to construct a portfolio that meets your guys' risk tolerances. You could go as far as like how to budget, how to create a plan on, how much do I need for retirement if I wanted to have this type of lifestyle, so on and so forth. So if that interests you, definitely head over to my Patreon and check it out, guys. And now I'm just going to kind of go over what my TFSA's performance is, and then we'll go to RSP and then also the LIRA. Now leave a comment below if you can figure out which one will be the one that performs the best. I think people, if you're familiar with the channel, you'll probably remember which one has performed better in the past, but just that little game to play. Anyways, the TFSA has come in at 5.91% year to date, which is really good. This is again the one that I play with on the most because of course I do contribute to it bi-weekly. Going into the next guy, which is my RSP, this guy has come in at 5.13%. Now, for anyone that's new to the channel, I do have an RBC account where I have a group work plan where it is invested into mutual funds. Now, just as a quick reminder, every time that account at RBC does hit 5,000, I do transfer it to my WealthSimple RSP. Now, that is really close to hitting that mark again, so you can expect in the next month or month and a half that I will be transferring over that $5,000. Leave a comment below if you guys want to see that process, and this is a process that would be transferring RBC funds to WealthSimple. So definitely let me know. I could make a dedicated video on that. Moving into the LIRA account, you can see here the best performer, the passively managed LIRA account at 6.84%. So yes, the The one that is less touched is the one that's performing the best, and of course has the most simplest portfolio with XEQT of 90% and bonds being at 10%. So I do find that kind of funny because, of course, everyone always kind of talks about that. The simplest, the most boring accounts are always the ones that perform the best. So that is kind of coming to truth here, but I do kind of want to highlight on this because this has been questioned quite a few times on Reddit. I do kind of get a lot of personal messages. Now, I want to highlight that playing in a portfolio can be somewhat, mentally appealing, and it might provide more value than you realize. Now, sometimes if you just kind of do the set and forget, it's maybe boring. Maybe you don't necessarily get the thrill out of investing because it's just so, again, boring, right? So if you have that itch to play, I personally fully support having that little bit of side percentage within your portfolio to kind of play around with, because if it keeps you intrigued and with no pun intended, invested into your financial literacy and financial future, I think it's a great thing. So again, I would never recommend like the majority of your portfolio in that kind of aspect. That's why I keep XEQT as like 75% of my portfolio as my core, and the rest of it I kind of play with. So again, let me know what you guys do. Are you guys more of a set and forget style, or do you like kind of massaging and playing around with your portfolios as well? So you'll see here on the screen, obviously now I've moved to the year to date of the entire portfolio, coming in at 5.87%. And one of the things I do kind of want to highlight, which is kind of like a personal achievement, I'm very proud of this, and that is that the net contributions are only $910 year to date, and it's March 5th today. But the investment growth has been $3,300, which is really cool. And so it's kind of neat to finally start seeing how my contributions are actually less than the investment growth. So I think that's a pretty good pat in the back. I think it's kind of a milestone to officially get to that point. And so I'm just very proud of that. And I just kind of wanted to highlight it on this video. So I also wanted to kind of just show the dividends that this portfolio has kind of spit out over the last little while. We have a total dividend of $472 with an average of $218. So now, of course, XEQT pays out quarterly, and that's why it's super high right now, because I got one of those quarterly payments throughout all three accounts. So that's kind of where the performance of the portfolio is at. Now, I did touch base on how my RRSP is also within a group plan with RBC, and this is the fund that it is invested in, which is RBF 460. Now, I personally always use this as like kind of a personal benchmark, because you always ask those questions on whether or not, like, did I make the right choice by moving from those high fee mutual funds into the self-directed? Well, you'll see here today, obviously, I'm near 6% overall on the portfolio, and this guy here is actually just over 3% year to date. So you can see how the fees do make a difference. So again, if you guys have other funds within mutual funds, definitely consider self-directed. It's not hard, especially when you look at my LIRA account, which is more of a set and forget. There's really nothing to do with it, and it's performing almost near 7%. So definitely something to consider. Definitely check out this video if you guys are interested in checking out more of my content, and we'll see you guys next time.